commodities market update. Oil prices edged higher this morning, though investors remain worried about the rapid spread of the Omicron coronavirus variant globally, prompting countries to consider more restrictions, potentially denting fuel demand. Brent crude futures increased by 9 cents to $71.61 a barrel, while U.S. West Texas Intermediate crude futures rose by 23 cents to $68.84 a barrel. Well, British Prime Minister Boris Johnson had said on Monday he would tighten coronavirus curbs to slow the spread of the Omicron variant if needed, after the Netherlands began a fourth lockdown and other European nations considered Christmas restrictions. On the supply front, OPEC Plus compliance with oil production cuts rose to 117% in November from 116% a month earlier, indicating production levels remain well below agreed targets. All right, let's talk more on the commodities market space, and we have Dumebi Yeke here with us. Good morning, Dumebi.
Good morning.
Omicron seemed to be roiling the global markets,
yes,
not just the oil market, although we saw a little bit of increase today, but we with Omicron, we're not sure that the prices will keep rising. But how low do you see, or what direction really, as the year draws to a close and with this development of the Omicron variant and countries trying to enforce one restriction or the other? So what direction are you seeing the oil market?
I mean, in terms of direction, we can only look at what's currently happening and how much more we can speculate to say this is where oil prices would be in the next few weeks or in the next few months, and that's because the activities pushing or giving the direction for oil prices are somewhat bearish at this point. So we expect that oil prices will be bearish in the near term. The Omicron virus is really spreading in European countries and the US. I mean, the UK, about 20% of their recent cases are as a result of this variant. Netherlands is in its fourth lockdown. Other European countries are considering lockdown restrictions right now. So investors are worried about how this would play out in the near term, considering the fact that when the winter season, there's need for an increase in the supply of oil, and OPEC Plus in itself is still being conservative with its oil supply, and U.S. shale, there hasn't been any significant increase in U.S. shale production in the near term. So oil prices are likely going to remain bearish, and that's because right now demand seems to be the outlook on demand seems to significantly outweigh supply, even though OPEC Plus is quite optimistic that demand will increase in the first quarter of 2022. It recently increased its oil demand forecast to about 99.13 million barrels, and on the expectation that the Omicron variant, the impact of the Omicron variant will be short-lived, and many countries will have adopted a lot more vaccination.
But we have seen that this is spreading
as fast.
Really
so clearly there might be some. So clearly there might be some review of that forecast. We might see the OPEC Plus and even other international energy agencies review their forecast on global demand. And this is not because these countries don't want to demand for fuel or even natural gas, but because right now the attention is going to be shifted towards curbing the spread of the Omicron variant.
Yeah, back here in Nigeria, we're already seeing have the impact on of this drop oil price on our reserves, as the external reserves have dropped considerable.
Exactly.
But should Nigeria really be worried at this point?
Considering the fact that the federal government has remained quite on the border when it comes to their forecast or their budget benchmark for oil prices, I mean, we can still say that we're somewhat safe. The budget benchmark, even for 2022, is just about $52 per barrel, so we're still safe. And the expectation for oil prices falling, oil prices are not expected to fall even below $60 per barrel, so we're still somewhat safe. But the truth of the matter is that Nigeria is more sensitive to changes in oil production and prices, and our oil production has remained very shaky and wobbly since And that's due to vandalism and disruptions within the major oil-producing areas.
Now, the Naira gained at the parallel markets. Meanwhile, of course, we just talked about
yes,
external reserves maintaining the declining trend. How sustainable is this appreciation perhaps we're seeing in the market?
Yeah, so the thing right now is the dynamics between the parallel market and the official window is once there's a substantial increase in forex supply at the official window, we see demand gravitate towards that window, and then we see the parallel market rate appreciate. But in terms of sustainability, that only depends on how consistent the CBN is in increasing forex supply towards that window. And it's not only about being consistent, but it's also by maintaining the same magnitude of supply. If today today forex supply is increased by 87% and tomorrow it's just 2%, there will be, because the market players would definitely hinge on speculation and panic buying and then resort back to the parallel market, and would see that rate depreciate. So the supply of forex towards the official window has to be consistent.
Well, the federal government has just launched a committee to boost sorghum production. That's for local consumption. Sorghum is used in producing alcohol, I guess.
Yes.
Yeah.
And some other products, yes.
Products, yeah. So, but how can this really help to boost our reserve?
So the thing is, Nigeria is currently the second largest global producer of sorghum after the US, but Nigeria still imports sorghum from the US.
Why?
So clearly there is still some shortfall in meeting demand, and I'm sure that's why the federal government has come up with this technical committee to ensure that we're able to boost production of sorghum. Now, sorghum is not only used for beer or alcohol, but it's also used in the production of certain cereals. Sorghum is very high in protein, and it's also used for animal feed. It's also used for animal feed. So there's quite a range of products that sorghum can be used for. And for some reason, sorghum can also be used in place of wheat flour. So if the whole grain is processed to flour, it could be used for used in the production of bread. And that is somewhat of a comparative advantage for Nigeria. And the reason being that the wheat being used for bread or for some of these confectionaries is actually imported. That's durum wheat, and Nigeria doesn't produce that particular wheat. So if we're able to leverage on the production of sorghum, we can actually reduce our importation on wheat and just basically harness the potentials of this particular commodity.
Well, one thing is to produce, another is to also enhance the value chain. What for you would you expect from this committee in this regard?
I mean, aggressive directives, towards boosting the value chain of this commodity, considering the fact that it has a wide range of byproducts that it can be used for. It can be turned to flour, be used in the production of bread, and we have so many bakers in this country. We have top companies that import wheat, and if they are able to, join forces with this committee to boost the value chain of this commodity, importation of which will be reduced, would see that more farmers are equipped to produce, to farm this commodity. But the big question now is this: how do we encourage more production of this commodity across the states, considering the fact that the top producing states of this commodity are in the north and they're currently plagued with insecurity? Although sorghum is produced across a wide range of states in the country, the major producers are still within the northern region of the country. So except these companies and the technical committee will encourage a large-scale production and value chain in other parts of the states, we will continue to see the problem that's currently lingering in the production of sorghum.
All right, we're in the week of Christmas. Let's see how the domestic commodities prices are doing. What are we seeing there? What are the key drivers at this time?
Well, typical, we're still seeing prices, on the high side. Commodities like chicken, fish, which people really enjoy during the Christmas period. We're already seeing an increase in demand for those commodities, tomatoes as well. Onions is still quite scarce, and that's because we're currently like in the planting season for onions. So the onions you're seeing now are the really, really tiny ones, and and the price is really high. Pepper as well, but pepper is currently in supply, but the pepper that we're seeing is the really big ones, not the one that is really hot. So people still have to spend as much to buy pepper. So other commodities like vegetable oil are still quite on the high side. We're seeing that more people are moving towards the unbranded ones, and that's because that's a cheaper option than the branded oil. Palm oil as well is still on the high side. So we're still seeing, right now we're seeing an increase in demand because the festive season, although consumer disposable income is weak. So marketers are looking to just sell off the current stock that they have. Normally they would have stocked up for this period because there's usually a very high increase in demand. But right now we didn't see that aggressive increase in inventory for these marketers. Just what they had, they just planned to sell off and just make do with what they could during the Christmas period.
Well, I guess irrespective of the high price, we're going to have a Merry Christmas.
Of course. Nigerians know how to adapt.
Absolutely. All right, thank you very much, Dumebi, for your time.
Thank you so much. Okay.